Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, hope you had a good holiday. Thanks for coming on.
Happy to be here.
Well, investors over the weekend following every bit of news about the health of President Trump. Futures up at the moment. What do you see happening with stocks in the coming week?
Okay, well, the U.S. markets have been recovering after hitting a low on September 23rd, but it fell slightly on Friday. Now, that wasn't necessarily because of President Trump, because President Trump's hospitalization news made the news after the markets closed. So the lowering of the market on Friday was due more to the lack of agreement on stimulus package and the general concerns about how badly the coronavirus is going in the United States. But there has been more and more focus on tech stocks. 80% of fund managers surveyed last month by Bank of America said that buying technology stock was the market's most crowded trade. And the five largest U.S. tech companies, the Google parent Alphabet, Amazon, Apple, Facebook, and Microsoft now account for 25% of S&P 500's market capitalization, according to Oxford Economics. So the current stock market is basically driven by tech stocks. Now, other interesting news about the stock market that came out, which may be affecting the market, was that the Biden economic plan does involve higher taxes, basically undoing the Trump tax cuts that seem to have some analysts concerned, but also Moody's Analytics and Oxford Economics has published reports saying that economic growth for the United States would do better under Biden rather than Trump. So that might be affecting some of the market as well. And the other markets, they seem to be holding off. All the European markets as well as Asian markets are currently mixed. They seem to be waiting to see what's going on with the United States with President Trump, and this is probably going to continue until the U.S. elections.
Well, now, Korean stocks strongly higher today after the long holiday. Retail investors selling the KOSPI today, though. What's the story in the Korean markets?
Okay, well, the Korean analysts, they seem to be looking at the U.S. stimulus package as well. Right now, because Trump is falling behind Biden and Trump is hospitalized, the Korean analysts are saying that it is more likely that the United States will agree on a stimulus package. Democrats have already passed a stimulus bill worth $2.2 trillion in the House, but the Republican-dominated Senate was unwilling to pass such bill with such high amount. But because President Trump is now so far behind, and because President Trump has caught coronavirus himself, it may be that the Republicans may agree to a stimulus package with such a high spending bill on it. And then Korean market has also been affected by good news on exports. It was up 7.7% over last year. It is down 4.0% if you calculate it on working day basis, because we had no Chuseok holidays this year compared to Chuseok falling in mid-September last year. But from the government analysis, that last year we had an unusually productive export on a daily basis. So even though it fell 4.0% on daily basis, it actually is a very good number. We did recover to a pre-coronavirus export level, $48 billion for the month and $20.9 billion per day. So this is a slight sunshine in the tunnel. Automobiles did especially well. It went up by 23.2%.
Well, we'll have more data out this week on consumer prices, also projected earnings for the third quarter from Samsung, LG. What's on your radar this week, Professor?
Okay, well, there isn't that many interesting statistics coming out this week, either domestically or foreign. Other than the data that you mentioned, the other Korean statistic of interest is August balance of payments, the current account and the capital account. But because we know the trade account more or less already, we know that the big news from that balance of payments, which is that current account will be in surplus. And then for foreign statistics or information, the most interesting seems to be the minutes of the U.S. Fed FOMC meeting that they had last month, and we'll see exactly how the FOMC members and the Fed evaluate the current state of U.S. and global economy.
Indeed, we'll have to discuss that later this week. Thanks so much, Professor Yang, for sharing your insights today.
Thank you.